Good morning from SuperReturn 2015, Boston, Massachusetts, here with Michael Fisch of American Securities. Michael, can you give a brief introduction to American Securities and your strategy?
Thanks, Marc. Great to be here. We were founded 21 years ago and started our firm with outside capital. Our origins go back to 1947. Today we have about 20 companies in our portfolio, revenues of over $13 billion, and EBITDA of about $2.5 billion across 20 companies.
Given the current valuation environment, how does this impact your approach? If it's a great time to exit a company, can it still be a good time to be buying companies?
We think it can, but as at all times in investing, you got to be careful, you got to do a lot of due diligence, and you have to be partnered with great management teams. So we're always trying to meet great management teams and invest in industries that we think can withstand downturns and have growth opportunity, always in partnership with the existing management teams.
You just completed a very successful fundraise. You have additional capital to put to work. Does this impact your approach at all? Does your underwriting change? Do you feel more pressure to put money to work?
Not really. We feel grateful that investors trusted us with capital again, and so our current $5 billion fund is certainly a little bit bigger than our prior $3.6 billion fund, but we think that just means more deals, more diversification, exactly the same deal size, exactly the same processes, and as our team has gotten bigger, we think they have the capacity to do that. Although it's never easy, and it's always hard, and we'll be working hard to do it.
We've seen some recent trends in the industry from introduction of operating groups. We've seen distressed debt initiatives, ESG has become a focus, GPs going public. Can you share some of your views on these, and maybe what do you see as trends going forward for the industry?
Sure. You know, the origins of private equity were two guys trying to do deals, typically with financial backgrounds. And in the current environment, you have to make companies better once you own them, and you have to understand them better to make sure you buy the right ones. So we started about a dozen years ago, we call our resources group. Today it's actually bigger than our investment team in terms of number of people, and these are functional resources in strategy, IT, human resources. We have an office in Shanghai, China, all to help our companies be better and help us understand those companies before we invest. So I think all firms need an answer to how are you making that company better once you invest? What are you bringing other than capital to management? In terms of ESG, that's a very important topic. It started, I think, more in Europe and in Asia, but it's migrating more and more to the U.S. We have a set of firm values that we think incorporate a lot of ESG stuff, but it comes up more in conversations and due diligence, and investors certainly care about it, and I'm sure that'll be a growing trend.
You mentioned values, and I think American Securities has been the forefront in terms of giving back to the communities. It's been one of your hallmark values for the firm. Can you speak a little about the genesis of that and what it means to your firm?
Well, we've had a mission and values code for a long time, and the mission is to generate great returns for investors by investing in great companies and helping the existing management teams make them better. And then the values below are partnership long-term and also giving back. We think it's very important as people, your firm, other firms, to make our communities a better place. And so we have service days both here in New York and in Shanghai, China, where we actually go into the community and work with various charities as a firm. We have a matching grant program and an outright grant program for our colleagues to give money, and we have a foundation which also gives money away, and we think that is not inconsistent with our mission, which is to generate great returns for investors, but also part of our obligations as citizens of the world.
Great. Well, thank you, Michael. Appreciate your time today, and enjoy the rest of the conference.
Thanks, Marc. Appreciate you having me.
Thanks.